Did you know that female shoppers get charged more at the register than men?
Under my leadership, women would not have to pay taxes. No, they wouldn't. You're a woman. No taxes for you. Everything is a tax write-off.
For women over the course of an average lifetime is literally thousands of dollars.
It costs more for a woman?
Mm-hmm.
Wow.
That's terrible. I think that men should pay more in taxes than women.
These are issues of national concern. These are not concerns that are indigenous only to New York City.
You just saw a handful of clips arguing that men should pay more taxes and that women are unfairly burdened and that the so-called pink taxes are somehow sexist. Those claims feel intuitive to ignorant people, and they stick around because they sound like arguments about fairness. But today's video is not about feelings or so-called fairness. It's about who actually pays how much for our national, state, and local taxes. Because when emotional claims about fairness turn into policy, they stop being opinions and start becoming laws born out of incorrect statements that are meant to shame and guilt men. So before anyone decides who should pay more, we need to be honest about who already does. I'm not approaching this as a political talking point or a culture war response. I'm approaching it the same way I approach every other deeper dive on this channel, by slowing the conversation down and uncovering the truth beneath the false claims. That means separating prices from taxes, rhetoric from revenues, and feelings from reality, and then exposing where taxes really come from. And by the end, you'll understand why the pink tax is false, how the government revenue is actually collected, and how many men already fund the majority of the U.S. tax system.
It's time to all choose your timeline on the roller coaster of life.
Before we get into the several tax categories and who pays more or less, let's get the record straight on the so-called pink tax. Oh, and by the way, I'm doing a video in a few days that's a dive into empirical research that the U.S. Department of Labor debunked regarding the gender wage gap way back in 2009. Now, I know that many of you watching my content already knows that the wage gap is a myth, but my intention is to give the data and the evidence to be more confident when people try to convince you otherwise. So look for that coming soon. All right, back to the pink tax. The idea is simple. Women are charged more than men for everyday goods and services just because those products are marketed to women. Razors are the classic example, along with personal care items, clothing, and things like haircuts. We're told that a pink version costs more than a blue version, so the conclusion is that women are being unfairly charged extra simply for existing. That rhetoric works because it aligns with how women experience shopping and how companies take advantage of their buying behaviors. They notice shelf prices, and when two items look similar but one costs more, they have a fit. So for many women, it feels personal, immediate, and unfair in a way that's easy to grasp without explanation. It's also powerful rhetoric because it's rarely presented as just a pricing issue. According to women, the pink tax is framed as part of a broader fairness narrative. One more example for them of structural disadvantage quietly adding up over time. That narrative connects a small, concrete experience like buying shampoo into a larger moral story about inequality. It's visual, it seems intuitive, and it's easy to explain in one sentence. Most importantly, it already sounds like a tax, which primes people to think about injustice and policy, even though it happens in an open market. That's why this conversation starts where it does. And it's also why it's the right place to begin understanding much more about what actually gets taxed, who pays it, and how government revenue actually works. Now let's move from pricing to taxes. This is where the conversation usually goes off the rails, and it's worth slowing down here and being precise. I don't want to insult anyone's intelligence here, but again, it's important for me to put this into early context. There's a fundamental difference between prices and taxes, and once we say it out loud, much of the confusion disappears. Prices, as you know, are set by private sellers. With very few exceptions, prices are paid for products that are optional, interchangeable, and even avoidable. If you don't like the price of a product, you can switch brands, you can buy a different version, Hell, even wait for something to go on sale or skip its purchase altogether. Even when pricing feels annoying or unfair, the transaction only happens if we agree to it. But taxes are different. Taxes are imposed by the state or the nation. They are compulsory. They are enforced and unavoidable. We can't opt out of income tax by choosing a different employer any more than we can avoid property tax by picking out a different house. And if we don't pay, there are penalties. That enforcement power is what makes a tax a tax. When a company charges more because of packaging, design, or perceived willingness to pay, that is a marketing strategy. It may feel like it's exploiting people, but it's not government extraction. And calling these price differences a tax blurs two completely different systems. One is about consumer choice and company profit. The other is about regulated revenue collection backed by enforcement. Once we separate prices from taxes, the entire equation changes. It's no longer about who pays more for razors, deodorant, or haircuts. Those are private market choices. They're not what funds the government. So if we want to talk seriously about fairness, the question to ask is, who is most exposed to compulsory payments over time, in what amounts, and through what systems? And that shift from personal anecdotes to structure is what makes the rest of this discussion possible and even necessary. So let's discuss specific taxes that we all pay and who pays more between the genders. If the goal is to understand who pays more, income tax is the most logical place to start. This is the most visible form of taxation, and it appears on every paycheck and dominates public institution and intuition about fiscal fairness. For context, the United States income tax system is progressive, meaning that higher earners not only pay more in absolute dollars, but also account for a disproportionate percentage of total income revenue. The more you earn, the more percentage you pay of those earnings. I'm sure it's no surprise that the IRS statistics of income data consistently show that a relatively small share of high-income earners contribute the majority of income tax at a federal level. And high-income brackets are disproportionately male, which results in higher aggregate income tax paid by men even under formally gender-neutral tax laws. This outcome is not driven by differential tax rates or explicit policy targeting, but by the interaction between income concentration and the progressive tax structure. When more income flows through a group that is concentrated at the top of that distribution, more tax revenue intuitively flows from that group as a consequence of the system. This establishes the baseline pattern that men pay more in income tax in aggregate because earnings are unevenly distributed and income tax is structured to extract the largest share of revenue from where income is most concentrated. By the way, I'll be putting sourced links in the video description as always, so go check those out for yourself. So income tax alone already produces a measurable skew in aggregated amounts paid, but it's only one component of the broader revenue system that determines who ultimately funds government activity. This second source of taxation between the genders is not only one that women will never admit, it's one that very few of them have even heard discussed. Beyond income tax, a substantial portion of some men's earnings is extracted again through mandatory support payments. Child support and spousal support are not discretionary household expenses. They are court-ordered and state-enforced obligations, and they are overwhelmingly paid by men. So let me be clear that these payments are withheld from income that has already been taxed and given tax-free to women and mothers. For those of you who aren't already familiar with this, federal income tax and payroll taxes are assessed first, and only afterward are support obligations calculated and enforced. Under the Tax Cuts and Jobs Act of 2017, spousal support for divorces finalized after 2018 is no longer deductible for the person who pays them, and it's received tax-free by the recipient. So this means that men's income is taxed at the point of earning it, and then paid to women under law without any offsetting deduction. From a public finance perspective, this creates a one-way after-tax transfer layered on top of the existing income tax system. While these payments are not labeled as taxes, they are compulsory, they are enforced by imprisonment and loss of freedoms, and unavoidable once they're court-ordered. Failure to comply with them triggers wage garnishment, seizure of tax refunds, license suspension, even interest accrual and penalties, and potential incarceration, as many of you already know. And enforcement intensity is comparable to, and in some cases actually exceeds, that which is applied to traditional tax liabilities. It's important to understand this because standard tax data do not report this layer of taxation. Again, I'm talking mostly about the taxes men pay on the payments that they make to women and them receiving it as tax-free income. So ultimately, disposable income is reduced through state mandate, but the transfer does not appear as tax revenue paid by the individual who earned the income. As a result, the financial burden carried by payers, here generally men, is systematically understated in aggregate tax discussions. I've also covered the topic of who is ordered to pay more support and who actually does pay more when they're ordered. If you want me to do another video on that topic, please let me know in the comments. So up to this point, it's been easy to think of taxes in terms of paychecks, annual income, and who's taxed on court-mandated support payments. And the next several categories are less obscure for many people, but certainly no less real. Here I'm talking about a very large share of public revenue that doesn't come from wages at all. It comes from assets. Capital gains and investment-related taxes introduce different types of concentration effects. Unlike income tax, these taxes are often sporadic rather than scheduled, but when they do occur, they involve large sums and substantially affect aggregate tax contributions. In a nutshell, men hold disproportionate shares of taxable assets, including equities, things like business ownerships, and income-generating property. Think of them as landlords, if you will. As a result, taxation on capital gains, whether through asset sales, business exits, divorce-related liquidation, or estate events, are more likely to be triggered by men. IRS data consistently show that capital gains income is heavily concentrated among higher earners where men are overrepresented. And because capital gains taxes are assessed at the point of realization rather than continuously, their impact is often underestimated and understated in everyday discussions about taxation. However, these events generate large, distinct payments that meaningfully contribute to total tax revenue and further skew gendered contributions made by men. Fourth on our list is sales tax, which operate on consumption rather than income. But the distribution of sales tax burden depends far more on transaction size rather than transaction frequency. And again, this is where a lot of women will never admit whether they've been aware of it or not. And publicly, this distinction is often overlooked, which makes the resulting contribution patterns seem to be even more counterintuitive. Listen, men disproportionately purchase high-ticket durable goods such as vehicles, work trucks, tools for the business, other business equipment, recreational vehicles, and large electronics. Because sales tax is assessed as a percentage of purchase price, a small number of large transactions can generate more tax revenue than dozens or hundreds of lower-priced purchases that are spread over time. And as a result, aggregate sales tax contributions skew toward people making fewer but more expensive purchases. Now, I realize that this contrasts with common beliefs that frequent household shopping for things like $50 shampoo and $90 mop bottles of moisturizer drives tax burden. But frequency of those purchases matters far less than dollar value of what's actually purchased in total. When consumption is weighted by price rather than item count, high-value purchase accounts for disproportionate shares of sales tax revenue that are paid by men. Next on our list is property taxes, which are tied to ownership and assessed value rather than day-to-day use, which makes them a long-term and cumulative form of extraction. Unlike income tax or sales tax, property taxes persist regardless of changes in income or spending and increase automatically as property values rise. Men are more likely to be primary or sole property owners, particularly following divorce, and they are overrepresented among business property owners and those who finance major renovations or capital investments. In fact, things like renovations and capital improvements, they raise assessed values and permanently increase tax liability, often without any corresponding increase in liquid income. Over time, this creates sustained exposure to property taxation that compounds year after year. And because property taxes are paid annually or quarterly and are difficult to avoid without selling the asset, they function as a fixed obligation rather than a flexible expense. And this makes their burden less visible in short-term comparisons, but significant across the life cycle. The effect is structural. Where ownership, reassessment, and long-term liability are concentrated, property tax exposure accumulates accordingly, contributing meaningfully to disproportionate tax burdens for men over time. Even less immediately visible disparities come from this next topic, and that is fuel and excise taxes, which are embedded in both consumer and business prices, making them rarely discussed but highly reliable sources of revenue. Unlike income or property taxes, these are paid incrementally through routine activity rather than through discrete billing events. More to the point, men drive more miles on average, that commute longer distances, operate higher priced and heavier vehicles, and are more concentrated in businesses such as transportation, construction, logistics, and other fuel-intensive occupations. And as a result, men pay a disproportionate share of fuel taxes through gasoline and diesel consumption. Similar patterns occur in other excise tax categories for things like alcohol, tobacco, certain regulated goods, where consumption and exposure are unevenly distributed by the sexes. I understand that those are consumer goods, but still excise taxes nonetheless. Because these taxes are embedded in everyday transactions, they're rarely perceived as taxation in the psychological sense. Yet, in aggregate, fuel and excise taxes generate substantial revenue and function as a steady, unavoidable drain tied directly to work, mobility, and everyday survival. The key point here is the cumulated effect of recurring payments tied to even work activities over time and where that activity is concentrated, even though it remains largely invisible and not discussed in headline tax discussions. And last on our list of imbalanced taxes paid between the genders is licenses, permits, and regulatory fees that function as participation taxes. These are mandatory payments required to work and operate equipment and even to engage in regulated activities, and they occur over time through renewals, inspections, and compliance requirements. In here, men are disproportionately represented in trades, construction, transportation, logistics, and other regulated occupations that require ongoing licensure. They're also more likely to pay recreational licensing fees that are related to events like hunting, fishing, firearms, boating, and similar activities, all of which fund and maintain our national parks and other natural resources. These payments are unavoidable in many men's professions and hobbies and are enforced through penalties or loss of legal access. Now, I understand that individually these fees may appear modest, but collectively they form a persistent layer of compulsory taxation that's tied directly to labor participation and regulated activities, thereby contributing to aggregate tax burdens in ways that are rarely captured in standard tax comparisons and discussions. So where does this ultimately land us with the discussion about who pays more taxes? When these tax categories are considered all together, men contribute about 60 to 65% of the U.S. tax burden. When we consider everything from income concentration to asset ownership and fuel use, tax payments are not evenly distributed. It leaves us with a roughly 60 to 65% contribution from men and 35 to 40% from women. A 50-50 outcome only appears if these exposure differences are ignored. Once actual revenue mechanisms are accounted for, average contribution changes predictably.
Women would not have to pay taxes.
It's literally thousands of dollars.
It costs more for a woman.
Men should pay more in taxes.
Men's products seem to cost less. Women paid more 42% of the time.
These are issues of national concern.
But that does not change the reality that men are supporting society. And don't even get me started on who benefits most from taxes that are paid. I'm talking about SNAP, WIC, and Section 8, along with spousal and child support that's received tax-free. Some taxes are visible, itemized, and enforced, while others are conveniently ignored by the women who think they're being treated unfairly. Men are exposed to more employment and family-related taxes that are mandatory, episodic, and difficult to avoid. All of which makes them feel heavier even when the average figures are abstracted. When payments are tied to work, ownership, mobility, and court orders, they turn from simple inconveniences to full-out life constraints. So ladies, government revenue is determined by activities, assets, and exposure rather than gender, as it should. I'm not saying that men should pay fewer taxes or that women should pay more. I'm saying that the ignorance is astounding when women believe that men should contribute more or that women should contribute nothing, especially given the 60-40 split we've already been experiencing.